Let's welcome on board Anupam Jindal, the CFO at Sterlite Technologies, joining in right now. Anupam, hi, morning. Tell us a little bit about the opportunity size as well as the addressable market for the company in India with respect to backhaul tower connectivity for incumbent providers, fiber direct-to-home penetration, and of course, rural connectivity in smart cities as well.
At Sterlite, we continue to be excited with the opportunities both in India as well as global level, driven by this data growth, humongous data growth which is happening, and the technology shifts which are seen by everyone around us. And in India, as you said, connectivity is continuously improving. And in terms of the both private and the government initiatives continue to be there. We have seen some of the large telcos announcing some of the plans connecting homes, millions of homes and enterprises. And we continue to look at those opportunities, work with those customers. And in terms of the overall addressable market, we have just mentioned that we currently operate in close to about $20 billion market, which we are looking at expanding to about $75 billion by 2023. So in next 3 to 4 years, that's a kind of expansion of total addressable market for Sterlite at a global level. And we continue to develop products, solutions, and products around that so that we can address the larger opportunity.
So given that you already have a 40% market share for OF in India, that's optic fiber, do you really see any challenges to growth? Will you be focusing more on export orders as a result? And what are the triggers or revenue drivers for the company, say, over the next couple of years?
So as we have been maintaining this 40% market share in India for a long time, and we don't see any challenge in maintaining that kind of leadership at the India level. And as India continues to grow in short term as well as long term, we don't see any challenge. As far as overall export is concerned, definitely as we have recently taken up expansion of facility from 30 million to 50 million, which is now complete and getting into commissioning. I think we will see more exports coming in because we see more growth at global level than what we see in India. And therefore, export will continue to be major focus for us. We are opening up new territories and new geographies other than Europe and China in a big way. And that will continue.
Sure. Current utilization levels are at about 85 to 100%, and the company is coming to the end of a heavy CapEx cycle. In what segments have you added capacity, and what are the asset turnovers for the new CapEx? Do you have orders from day one? What would be the incremental revenue and profit at optimal utilization as you see it?
Yes, the current capacity is fully utilized at 30 million kilometer annually, and we have downstream facility of 18 million kilometer on fiber cable, which is again fully utilized at the current moment. As far as this expanded capacity of 50 million is concerned, that's getting commissioned, and we'll see gradual utilization of that in next 2.5 years. We can see this capacity getting fully utilized. We will have this cable capacity also doubling up by next year, by June 20, which will take the capacity up to 33 million. Again, that will see gradual utilization in the same period. And therefore, we are looking at, in terms of asset turnover or utilization, I think we have capex to revenue ratio of about 1.25. So that way, I think it's a quite healthy ratio, and we'll see good return on capital coming in from these investments over next few years.
Right. Now, PE and EV EBITDA multiples have severely compressed for Sterlite. The company's lost about 2/3 of market over the last year. What do you attribute this to, Anupam? Any fundamental changes that are, partly responsible for this within the company or industry?
I think one, definitely that overall macroeconomy in the country affecting the mid-cap, small-cap multiples, that is one fundamental reason. Apart from that, we have seen some of the negative news coming in China, which has not impacted the performance of the company as significantly as we have seen the impact on the market price of the company, the share price of the company. But at a fundamental level, we don't see any major shift happening on negative side. Rather, we continue to see this challenging time as opportunities for us to further strengthen our market positioning in markets like Europe and various other new territories we are looking at. We have sped up our investment in technology, development of new products, new solutions. And these are the things which are really getting us excited. The 5G is starting to happen all across the world now. And these are the things which will definitely give tremendous thrust to the company's growth.
You know, there are some concerns on the heightened working capital on the systems integration business that will raise debt levels and, you know, interest expiry as well for the company. How big of a concern is this internally as well? And what is it that you're doing to deleverage? Are there internal deleveraging targets going forward now that CapEx will soon be complete?
I think the services business by design, it's about 30 days additional working capital than the product business which we have. And products we typically have 60-65 days kind of working capital. This business on services side has about 100 to 110 days of working capital. And since that's the only capital we invest in this business, so that way this business has slightly more. And that affects the overall working capital by about 10 to 15 days at a blended level. We have seen that number in March 19 balance sheet also, that our working capital at a company level was 77 days as against 63 days last year, where we had lower contribution from the services business. But at internally, internal levels, we don't really get any concern on this business thing. We continue to execute the project in timely manner. We are also able to collect money against the work which we are doing, and we are not seeing any kind of delay or hold up on payments at that side. As far as the leverage is concerned, year end of March, we were at close to 1.1 kind of debt to EBITDA, one level debt to EBITDA, debt to equity. In June, which we had close to 1.1, 1.2. So that way we are not really having any concern. We are having interest coverage of about 7-8 times to EBITDA. So I think from that perspective, we are well within our limit. We have set a annual limit of 1:1 for debt equity, and we are confident that we will be able to achieve or maintain that on ongoing basis. And we don't really see any major concern. We continue to focus on cash flow definitely, and try to optimize at every possible juncture wherever we can do better working capital management in terms of improving the numbers from here.
Okay, where do we stand in relation to 5G implementation? Is it still a distant dream for India? 31 countries now have 5G licenses. 13 of them are conducting some kind of pilot with respect to 5G. How can Sterlite leverage its capabilities and take a larger chunk of the global market share, which is currently about 6% or so?
Yeah, so I think 5G is a global opportunity. And we are very happy to see a lot of countries already announcing and starting to work on that. Some of the countries have started trial run of the 5G, particularly US, some part of China, some part of Korea. So that opportunity is very, very exciting, quite large and long-term opportunity, and Sterlite is well placed. Unfortunately, in India, we still don't see major action happening on 5G as such. Partly the government is still taking some time, and partly the current financials of the telcos are also not affording that opportunity to them. But I think at a global level, since we have good amount of exposure, we continue to look at those opportunities and increasing our foothold on those sites. And we are really getting good traction from most of our customers, where we are getting engaged with them even during planning stage for the network build.
Okay, 75% of global brokerages now have a buy on Sterlite. They say that given the return profile, overall financial position, the stock shouldn't trade at such a significant discount. What do you say to that? Overall, in terms of the sentiment, at least it seems to be intact.
I think market has its views, and our analysts who have given the positive views around us, they probably understand better. And at our level, we continue to deliver on things. We have shown very resilient, strong performance over the last few years, in spite of some of the challenges we have seen in China and some of the other markets. And we continue to work on delivering what we need to do in terms of delivering strong growth over long-term basis with sound balance sheet, strong positive cash flow. Our dividend commitments continue to be consistent. So these are the things we continue to do, and we are sure that market will start reflecting the fundamental performance of the company and the potential we have going forward.
All right, we'll let you go on that note. Thank you so much, Mr. Jindal, for taking time out and joining in, giving us a sense as to what 5G means for the company, as well as